Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 78 unit building, 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below. Always consult with a tax advisor, financial planner, and/or attorney before making investment decisions. Having said all that, all you need to do to learn more is go to homeinvest.com or click in the description below.
Welcome back to Purpose-Driven Passive Profits. This guy's name is Nate Armstrong. He is the founder and CEO of Home Invest. My name is Steve Warner, and I'm the Chief Investment Officer. And our goal here is to help you learn to manage your money, be great stewards based on Matthew 25, and grow your income, grow your wealth so that you can have greater impact. Today, we are talking about the fees that syndicators charge when you enter a multifamily syndication deal. So if you are looking to passively grow your money, you're looking to invest maybe $100,000, maybe $150,000 into a syndication deal as an accredited investor, there are 6 fees that they can charge. We're going to go through what those fees are and what the averages are that you should look to pay on these fees. Nate, start us off. What are the fees? And then let's go through them.
So first one, acquisition fee. This fee is basically kind of like when you buy property from a realtor or from a broker, they're going to charge some kind of commission for their services. And so a syndicator or operator, they're going to do the same thing. They spend a lot of time out there hunting, usually out of their own pocket, flying, inspections, things like that. So that's an acquisitions fee. I've seen them range anywhere from 1% to as high as 5%. It really depends on the overall fee structure that the operators charge. Here in our company, we charge 2% for the acquisition side. So that's the acquisition fee.
Awesome.
By the way, like these fees, the way that they should be structured, because sometimes people will be like, well, fees, isn't that going to kill my investment? Unlike a mutual fund, unlike some of these other like stock market kind of funds that are managed that are out there, when a syndicator puts together a deal, they should be reporting your IRR, your internal rate of return, you know, the number on paper that shows you what they're projecting. They should report that after fees, net of fees. That's how they should do it. Not all of them do. We certainly do. We do it net of fees. So even after we get done talking about these fees, the goal return that we're aiming for people is net of fees. Okay. The second fee is a management fee. And this is usually in regards to like after you buy the thing, someone's got to be in charge of watching the property management company. They got to be in charge of making sure that the taxes get filed, tax returns get issued, our tax returns get done, and 1099s get issued. They got to make sure that investors get their distributions. And so there's time that goes into that. And so typically a syndicator or operator will charge some kind of management fee to do those kinds of services. Here on our team, we charge, so the property manager, they'll usually charge somewhere between 4% and 8% on property management. What we do is we just piggyback on the property manager. So we're at 6% for total services, property management and managing the property manager. Sometimes we make a little bit of money on that. Usually we're doing it more at cost or break even at best. The management side itself, like there's not a lot of money involved in that for the syndicator. The real spot for the money is this next one called the exit fee or profit split. It depends on the syndicator and how they're structuring it, but usually every single person that's doing deals like this, the biggest motive to do them is to get a piece of the profit when that thing sells. And at least for our company, like that's it. That's the prize. That's the golden goose. The management fee in the middle, it's nothing. It doesn't cover much. The acquisition fee up front covers a little bit of the cost to go out and find the property, but the back end profit fee, that's where I get excited. So in the industry, I know, Steve, you've seen other people, like what have you seen those fees range before?
I've seen them all the way. The very lowest I think I've ever seen is like 20, 25%. And then I've seen them go up to 50. There was actually one deal I heard of that was at 60. I didn't see it on the PPM, but I heard that it was up there. 50 seems to be the max though. And like some really high end syndicators that have done multiple deals have been charging that. But I've seen anywhere, I think average is like 30 to 35%.
Yeah, you got it. And so we charge 30%. That's where we get excited to do deals, and it's our biggest thrill and joy of being part of these deals. It's why we do them, so that we can earn that 30% equity. So when that property resells, what happens is that everybody gets their initial capital invested back first. So all of investors get their cash back. And usually the preferred return is paid out to investors. So in our case, it's a 6%. And then we start to divide the profits. So 30% of the pie that's there comes to our side. That's the exit fee or the profit split.
Awesome. If anyone's listening to this and you're like, that seems like a really high amount, this is where the person that is doing the syndication, the operator that is managing everything, that's taking care of everything, this is where they're making the bulk of their money. And it's where you're going to make the bulk of your money as an investor as well. You get paid out dividends every quarter. You're going to get pieces of the cash flow and that preferred piece that comes back to you. Then once everything is taken care of and there's a chunk profit, 30% of that goes here, which is considered very fair. Like I said, a lot of the bigger syndicators out there that have been doing this for 20, 25 years, they're now charging 50% there. This is the fee that you want to look for.
You got it. You got it. Steve, last two fees, they come around the loans. So when buying properties like this, usually there's a bank involved somewhere. Like we took a deal where we took over a bank loan. We assumed it, about 50% of it, $1 million loan, and then we raised the other almost $1 million in cash. So there's a loan that's like a little bit more than 50% loan to value. Someone's name has to go on that loan. Someone as a person, an individual that's in charge of the project has to go into the bank and sign paperwork with the bank. And so oftentimes what an operator will do is they'll charge some kind of a loan guarantor fee. And I've seen them and heard of them. You told me about one that was 0.8%. And I've seen them as high as going up to 5%. It kind of depends at what's at stake for the person that's doing the signing part right there. What's at stake with the actual bank. And so we charge a loan guarantor fee as well. It depends on the deal. It's anywhere from 1% to 2%. Again, just depending on the deal itself. And on that same note, let's just say that you're like 3 years into a project and the sponsor or operator sees a lower interest rate. They can jump on this lower interest rate, therefore increasing the cash flow for all investors on the project. If they jump on the new loan, then oftentimes there's some kind of refinance fee because again, they're guaranteeing it, they're going on a new loan, all that kind of stuff. And those range anywhere from 0.5% up to 2 or 3% that I've seen with other syndicators. So that's the fee stack right there.
There's one more that is near and dear to my heart. And this is something that I actually learned. I learned about it in the last couple of years. One of my friends that did about $105 million raise. And he put in the PPM a marketing budget fee. And that was part of the deal because there was such a big raise. I thought that was interesting. It is something that I have seen and I've heard about in others. We do not charge that fee, but it is something that is there. And it's a marketing budget to actually do the raise, which I thought was pretty interesting. I don't know if you have any thoughts on that one, Nate.
Yeah, like that's music to my ears, Steve, because we spend marketing out of our own pocket right now. And that's kind of what the acquisition fee helps us reimburse some of that, not all of it. But yeah, I like the idea, especially for a larger deal like that, because let's face it, to bring together a group of investors to do $100 million plus deal, like you're working a lot. Like you got to get the word out there, and marketing is very expensive these days. So it's an interesting fee. We'll probably look at it for larger deals in the future.
Yeah, for sure. I mean, on a smaller deal, like right now we have a deal that we're working on, 58 unit, 4 million. We're going to raise, what do you think we're going to raise on that, Nate? Probably 1.8.
Yeah, 1.5 to 1.8 range. Yep.
So on that, we're probably not going to need a marketing budget, but if you're going out and you're trying to raise 25, 50, $75 million for a big purchase, there is going to be marketing cost in there, and it makes sense to charge it. So these are the fees. when you are looking at a syndication deal, so we, of course, are partial to our deals here at Home Invest. You can go to homeinvest.com. It's also linked down below in the show notes and in the YouTube description. You can go check out our current offerings there. We do several deals a year. You will see our current offering. We make sure to charge low fees. We want to make sure that these are win-win-win across the board for you guys. So you can go to homeinvest.com to learn more about our current offerings. Till next time, remember, take care of your money, invest wisely, be great stewards. We'll see you next time on Purpose-Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Oh, so I'm excited to announce this. We've got a 78 unit building, multifamily property. It's 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below.